I published a blog post earlier today, August 26, 2025, discussing some of my recent bond and stock trades as well as my treasury bill purchases at auction. Links to my post, which I started to publish in October 2008, can be found by clicking SouthGent, and the link appears at the top of the profile page if anyone is interested. I will also briefly discuss Trump media's massive bet on Bitcoin in this video. I increased my purchases of Treasury bills some at auction to 35,000, but I'm in principal amount, but I'm still building up cash in my Fidelity money market account by not reinvesting most of the proceeds received from selling corporate bonds maturing in 2032 or later and receiving proceeds from maturing ones, which occurs multiple times most weeks. The bonds being sold were bought this year at discounts to par value, some as late as early July 2025, and all were sold at premiums to par value. In my last 4 weekly posts, including the one published earlier today, I have now discussed selling 48 $1,000 par value corporate bonds, all at profits. I provide profit snapshots in my post. I have 10 $1,000 par value municipal bonds that are being called early by the issuer on September 1st, 2025. That will lead to more buildup in my Fidelity money market account since I'm not going to reinvest the proceeds anytime soon. I am in a hunker down mode waiting for incoming. I do not need to take a risk, and I am just not comfortable now with the risk-reward balance as I see it in stocks and intermediate and longer-term corporate bonds. My main concern now is stagflation, which has resulted in moving into a wait-and-see mode until I have more data on both the inflation and weakening economy issues. If inflation picks up as I expect later this year and throughout 2026, and the Fed nonetheless cuts interest rates under Trump's political pressure, it is likely, as in more probable than not, in my opinion, that intermediate and longer term bonds will fall in price and rise in yields, providing me with better income options down the road by simply waiting and taking some profits now, and then hoping to reinvest the proceeds at higher yields to maturity and current yields than I'm now getting from that I would now get from reinvesting the proceeds. In my last post, I listed websites that track traditional valuation measures, and all are consistent with an overvalued stock market. Valuation indicators are not short-term market timing signals. A stock market may remain overvalued and continue in a parabolic rise higher for an extended period like the late 1990s in the US and in the 1980s in Japan on the Nikkei average. I am just not comfortable, as I said, with stock valuations now and am concerned that intermediate and longer term bond prices may decline if inflation moves persistently higher as the Fed cuts interest rates. Now to the Trump media stock that has the symbol DJT. I do not own this stock. It's not the kind of stock that I buy. When I discussed DJT in several earlier videos, maybe a year ago, I was simply rehashing information in the DJT SEC filings and comparing the valuation of DJT to other social media companies like Facebook, now called Meta Platforms, when they went public. The response from Trump supporters was what you would expect, nothing substantive, of course, no rebuttal with anything resembling a fact, but comments that like I was suffering from Trump derangement syndrome as the entire response, or other personal attacks similar to what Trump routinely uses now when responding to fact-based criticisms of him. Trump has made that kind of discourse acceptable in the United States, but only in what I call Trump's America. I wanted to summarize some information in DJT's 10Q for the quarter ending September 30, 2025. That document is available for inspection at the SEC website. This company recently raised almost $2.5 billion to buy Bitcoin and Bitcoin-related securities, and completed almost $2 billion or approximate $2 billion purchase in July 2025 of Bitcoin and Bitcoin-related securities, is how the company refers to that those purchases. Bitcoin-related securities might be Bitcoin ETFs. That information on how much they bought in July of 2025 can be found at page 30 of the 10Q. $1.44 billion was raised by selling more shares at $25.72. The price as of 10:40 a.m. Central Standard Time today, August 26, was $18.12, up more than 5% after announcing what the company called a strategic partnership with a firm called Crypto.com. The company also sold $1 billion in face amount of convertible bonds at a 4% discount to par value, or what is called OID, original issue discount, that is generally taxable to the owners as interest income. It would be an alternative to paying interest. The notes do not have a coupon, it's my understanding, but do require collateral of $1 billion, which may include the Bitcoin owned by the company. Collateral has to be maintained until the amount of the notes falls below $500 million, which may never happen before the notes mature. The required debt to collateral ratio is described at the top of page 18 of the 10Q form. If the company's Bitcoin is used as collateral, which I expect it is, then more Bitcoin may have to be used as collateral after decline in the price of Bitcoin using the formula set out there. The company described the $2.4+ billion raised as part of its, quote, Bitcoin treasury strategy. I do not have any information that the company bought more Bitcoin after spending $2 billion in July, which it disclosed in the 10Q. A potential issue is that the owners of the $1 billion in convertible bonds may require DJT to repurchase them at par value on November 30, 2026. That's par value and cash. Will Bitcoin have to be sold to meet those redemptions if they occur? The convertible bonds mature on May 29, 2028, requiring payment of par value for any owners tendering them for a cash payment. What would cause those bond owners, at least some material number of them at least, to retender their bonds for payment in cash at the earlier cash payment date of November 30, 2026, just around 15 months from now? That's a cash redemption that DJT, if the notes are tendered for cash payment, the DJT has to pay cash at par value. Reason would be for tendering would be that the conversion feature into common shares at $34.72 may not be viewed as attractive at that time and far too speculative as to whether the conversion feature would have any value at all, or what is known as a busted convertible. Tendering the convertible bond for a cash payment at par value on November 30, 2026, when the bond was bought at a 4% discount to par value, may be viewed then by some owners as the best option for them. The option becomes more likely, in my opinion, with a plunge in the Bitcoin price, less likely with a substantial rise in that price, and further declines in the DJ stock price would factor into the decision as well. Another concern for the stock price is whether DJT will have to liquidate Bitcoin at a loss in order to meet those redemption demands, either in November 2026 or when the notes mature in 2028. I have no idea what is going to happen to the Bitcoin price over the next 15 months or 3 years or so. Is a Bitcoin worth 150,000 or 200,000 or 50,000, somewhere in between, much higher, much lower? There is no way to assign a value based on any objective criteria. Nobody knows Bitcoin's value. Like gold, which I do own, Bitcoin does not generate earnings and pays no interest. I view them as alternatives to fiat currencies. They are worth whatever a human being decides to pay for them at a particular moment in time. And it's not based on anything that is normally used to value an asset. The value is set without regard to any valuation measures, as I said, used to price everything from real estate to stocks. There's consequently nothing concrete that anchors the price within a range. What is clear to me is that the DJ stock price has been drifting down some as of late, as the number of common shares has skyrocketed higher and the recent decline in the Bitcoin price. A potential concern that may weigh on the price in the future for at least some investors may be whether or not forced sales of Bitcoin at an inopportune time to meet forced redemptions of the convertible bond at on November 30, 2026. As of 6/30/2025, there were 277.3 million shares of DJT outstanding. The company reported a $19.982 million GAAP loss in the second quarter and $51.7 million GAAP loss for the 6 months ending on June 30, 2025. See page 4 of the 10Q. Revenues from operations was reported at $883,300. A significant part of the GAAP loss resulted from stock compensation related expenses, which is a non-cash item.